It is Wednesday, May 18th, 10:30 a.m., another zero DTE day, although every day now is a zero DTE day. So that's all good. This morning, I performed some analysis for the group, and it looks something like this. Well, there was actually much more involved. There's a lengthy narrative and other screenshots and determinations and looking at the options chain and all of that stuff. But my general consensus or consensus with myself was that the market was going down and that 4,000 was likely the target area. And we're just about there right now. Now, this is fairly early in the trading day, so that's something that leaves one to be concerned because you're not going to have the expectation that you'll be pinning a trade. I mean, it's very unlikely the market's just going to hang out here for the rest of the day. It will most likely come down to this other green line, which is an LVN or a low value node, and then oscillate in between these two green lines. And then it may in fact settle on the 4,000 mark. And we're going to keep track very closely to the growing interest on the options chain and what strikes seem to be prominent and so forth. But that's what it looks like at this point. That 4,000 is the odds-on favorite for where we're going to end the day. And let's see, right now, at least on the E-mini, that is where the predominant number of contracts are. We're currently approaching 4,000 contracts this early in the day. And if we take a look at the SPX, here I'll bring this over so you can see this. So there's the right there is the largest number of contracts so far, at least what I can see in range. And on the call side, there really isn't anything close to that. The closest thing you start getting up around the 40. Well, yeah, you'd have to go all the way up here. There's 5,000 contracts at 4,100, but that is way, way, way up here. And there's really no leading volume going to the north of where we're at right now. So, we'll take a look at how those levels grow in terms of volume. But right now it looks like to the downside is growing at a much greater clip than to the upside. So what that's saying is that the market is really looking to move further down. All right, so if we take a look at the SPX and the E-mini probably, well, they differ right now by about 5 points. So we're essentially looking at the same strikes. So yeah, so you can see right here at 4,000 is where the majority of the volume is. And if you were to compare that, you can make an argument that 4050 is a growing concern. You can see that there was high open interest, at least when the day started. And this 5,500 contracts doesn't really stand out as much as this 9,400 contracts on the put side. So the 5,000 on the call side does not really hold a candle to, and then also considering all the cluster of volume, the rising volume on the put side seems to indicate that we're going to be going down today. Today will be a down day, at least for the first half of the day. Everything could change on a dime, if we get something happening, a Fed governor coming out and giving their speech. Now, anyways, hold on, I've got to do the cough button thing. Almost completely over. Let's bring the microphone in play here. There we go. almost completely over the illness that I had. I think I probably had some influenza thing, but it was pretty nasty. Uh, Now, what we're here for today is to do or set expectations on the your trading. So a lot of people when they're in a service and any kind of service, they're expecting to see trades come out, and then they want all of those trades to be winners. If they go through a few days of losers, all of a sudden they're questioning everything in life. Yeah, the service sucks, I suck, the sun was in my eyes, there was an earthquake, the crowd was yelling at me, who knows? But they don't put their expectations in the right place, and they don't have a perspective on win rates and what to expect and what kind of clustering that you could get in terms of a streak of losers or winners. And so when you're in, say, a losing streak, you can lose perspective. Well, that will more than likely revert to the mean, and then you'll start doing some winning, etc. So what I thought I would do is do a little bit of modeling so that you can get a better understanding. And what I did was I took what I consider our worst performing months over the past year and a half, which come out to about a 50+% win rate and about a 100% return on capital, that sort of thing on average, at least for the winners. Or that was the sort of the max. Let's say that was the max winning. And so using those really bad numbers, you can get at least a baseline on what you think is the potential performance. And of course, I'm not taking into consideration outliers, because we have outliers that happen about 10 or 15% of the time when we pin a trade, which really, blow up the numbers. But, let's be realistic, and we'll use super conservative numbers on how we can figure out, what to expect in a month's worth of trading. So the first thing is that you need to figure out what's the minimum size account, what's the minimum size position that you may put on in this trading. And I would say that the minimum size position, or most of our positions, are about $125 to get into that position. If we go wider and you get up to $200, you could make a case where you can push the fly out a little bit, or go to a narrower spread. Maybe instead of doing 20 wide, you go 15 wide, etc. All of that can affect it. And depending on your account size, you want to control what that size, that minimum position size is, because, well, you want to stay in the game, right? Staying in the game is of paramount importance, but you don't want to reduce your risk so much that you don't have a positive expectancy. So that's, once you've come to grips to what that number is, and like I said, that number is about $125, maybe $150 of max risk that we take on any individual trade. Most trades like that will have an 8 or 10 times potential profit, or about an 8 times or 10 times expected potential profit. That doesn't mean we're expecting that profit. That means that there's now a range of winning and losing. The max we can lose is 125. The max we can win is probably closer to 6, 7, 8, 900. Now, if we make the max that we can win, say, 250, which we know is way below that, then we're talking about something conservative. So what I did was I put together a spreadsheet, based on these kind of numbers. And it looks like this. Let me... All right. So what I did was I said, okay, if our average risk is $125, you can see that in column B1, and our average win of those winners is 150%, approximately. We could say that our if we were going to look at profit from a range on the winning side from 0 to some number, we could comfortably say that that max size is $250. And that, of course, we know that it could go up to 750. But I want to be super conservative. And let's say that we're at a win rate of a little bit north of 50%, which is, again, very conservative. And so if we were to take, say, 25 trades in the course of a month, that means that if you were at about 55%, you would have you would have 14 winners and 11 losers. All right, and so of that total, if you were just taking the averages, would come out to some sort of number, positive 725. But that's not really realistic, because any given month you could have much less or much more. We don't know. But what we do know is that the losers are always going to be $125 loss. So then what I did was I took the win losses and I sort of spread them out, 25 win losses, of which there are 14 W's and 11 L's. And then I assigned a random column next to that. That's in the G column. And so if I sort these two together, then it will give me some sort of expectancy of, or the possibility of how wins and losses could be clustered together, right? And so every time then that I, do this sort of thing, it'll give me a different result, right? So sometimes I get lots of losers in a row, sometimes lots of winners in a row, sometimes it seems to be fairly well distributed, etc. All right. So if I then also go over here to this other column and just make all this, dollars, you'll see that, we have winning and losing days. All of the losers are at our max loss, $125, and all the winners are something between 0 and $250. All right. So then I can say something like, okay, what is my total in that given period, that month? All right. So here I'm saying, okay, my total P&L in this case, well, every time I hit return, it recalculates. All right, because I have the random function in there in Excel. So every time I hit return, it recalculates. All right, so that there we're seeing $502 in this random month is the profit and loss. Now I can cycle through that, and I could like sort, for instance. Every time I sort, it will recalculate. So that month was only $19. That month, $84, $268, $655, etc. A little bit of a loss, $152. Now, if I did this many, many times, you would find that the vast majority of time we're going to get a fairly good win rate. We could then look at what is the average win-loss, even using. Let's look at even using that draconian figure that we're using, and we could say that that equals the average. Now, I'm putting it here, but I don't want to sort it, because if I sorted it, then it would take everything. So what I did was I put it over here to the left, right, just so that you can see. So we don't really need this right here. But just to show you how I did the calculation. Let's see, we'll just clear that. Clear all. All right, so over here, you'll see, and we'll just make this a little bit colorful. You'll see the total profit and the average profit per trade. All right. So if I were to then, like I said, do something to change everything, and we watch that number there, and I just keep on, resorting. That will give you a different, what would be your expectation in any one month, not taking into consideration the outliers that we get, because about 10% of the time we pin trades and we make way more than $250. I'm capping the wins to $250 here in this random walk of profit, but I'm always taking a $125 loss. So sometimes we only make $59 on a trade, but every time there's a loss, we lose 125. So if you then total everything up, you can still see that the vast majority of the time we come out winners. Now here's a month where we're just a little bit below break even. But there's a good month, $941, etc. All right. So if you did this 100 times with even these draconian numbers and a dismal 56% win rate, you can see that there's generally a positive expectancy with this strategy. Then if you were to include the outliers, and so one way you could say that is say that, well, maybe that brings up my winning rate, to a max of, say, 300, right? And then if I did the exact same thing, and then again just recalculated the columns, you would see that the total profit and the average profit starts going way up, and hardly ever get a negative month. All right. And then we can also see, what we can expect in terms of streaks, in terms of losses and wins. They tend to be clustered, and that's kind of interesting. This is all random, just totally random. So hopefully that makes some sense to you, and you can see now the efficacy of this system going 5 days a week. Now, of course, we have the last trade or the final hour trade as well. So, we may have many more than this, but the max profit, the total risk, and all that stuff might have to be adjusted for that, given the fact that we're trading in the last hour. But this will give you a good idea of what to expect. And so as you're going from day to day, say this day I made $72, this one I only made $10, lost 125, won 120, lost 125. Oh, I had a good day, made $295. Another good day, 2 bad days, mediocre day, or flat day, mediocre day, loss, full loss, almost flat, okay, minimal, a little bit better, total loss, pretty good day, total loss, marginal day, loss, pretty good day, marginal day, loss. And given all of that, right, at the end of the month, now this is also the, if I were to do a trade like this, I would say that the minimum size account that I would want to be working with would be a, say, $3,000 to $5,000 account. I would just say 5,000 is the minimum. And so one of the things that I would be interested in is, what is my my max drawdown, right? So I would want to plot this. Let's see, with maybe just a simple line plot. I don't know if this is actually, so we can see, but this isn't not an accumulating plot, so this is hard to envision. So maybe what I do is I take this to equal that, and then I accumulate it. So then I say that this column equals this plus this, this plus this, right? So then I get an accumulated value. All right. So here I ended up at 360. So now I can plot this, and then that will show my equity curve. Insert. Oh, that's not right. Let's see. All right, so there's my equity curve for a month. Now, in this particular scenario, I had a little bit of a drawdown. You can see there was a high watermark here on trade 2. Lost a couple of trades in a row, and you can see that here in these trades. Lost 2 here. Had a couple of small trades that were of little consequence, then lost 2 more in a row before I started coming back. So here I had a drawdown, and from peak to valley, you'd have to go all the way out to the middle of the month before I started making money again. All right? And so there was a little bit of drawdown here. Of course, this is, this particular scenario. I could, change the scenario and just resort it and see if I get a different. Now, this obviously looks like a much better profit curve for this month. But now we can see what our profit curves might look like each month. Now, this just looks like a really bad one, even though we still came out ahead at the end of the month. All right. So our real goal here is to try to, now this is month to month, and if you kept on stacking these one on top of the other from month to month, it would start smoothing out and start looking like just a sort of a bottom left to top right type of curve. But this will give you, an idea of what you can expect month to month. And it, when you're in the weeds and you're looking at 2, 3, 4 losses in a row, it may seem like a disaster, and then it takes you, 2 weeks to get you a high watermark. You might get a little frustrated, but you still have a positive expectancy over the long term. All right? So it's just a good way to put all this into perspective. So I don't know if there are any comments on that. Does that make sense to you or not? Let's see. What's the difference between preview mode and back to live mode? Okay. Is there anybody in the peanut gallery willing to comment on this? No? All right. Let's see, how many people do we have online? We've got 42 people and nobody's saying a darn thing. Oh, that's something. Thanks, Chris. Someone said thank you. This is pretty impactful. I'm showing you what is considered our worst or most conservative look at profit with the 0-DTE system. And it is producing really impressive results in terms of our expectancy and what we can look at. The problem is that when you're actually trading it and you have a few losses in a row, or you go a week or two before you hit your high water mark again after having a drawdown, it may not feel so great. But when you pull back and you look at what it is over a long time, it starts really then sinking in that, wow, this is fantastic, right? So, and Jeff says, yeah, his win rate so far is 70%. Now, I was doing all this on the idea that we had this super low win rate of 55%. And that is like the super low win rate when we are having our worst performance. There has been one month this past January where we get down to about 35-40%. But even then, we had a positive expectancy, right? When volatility is elevated, our win rate starts rising to 60, 65, 70%. And then we might even have streaks where there was one streak last year, we went like 9 weeks without a loss. I mean, or I think there was one loss in not 9 weeks, probably closer to 6 weeks with only maybe one loss. And so we had a win rate approaching 90, 95%. I mean, that's incredible. Of course, we were only trading 3 times a week back then. So at least though, with this type of sheet and this type of modeling, you can gain a perspective on what it's like to be in the trenches when you do go through a losing streak or a winning streak, and you can see what is ahead of you. And also when you apply the randomness, you start understanding, where you are at that particular time. Is it always going to be like this? Or is it going to get better? Or is it going to get worse? And if you run these simulations enough, and then they start averaging out, you start getting the real big picture. And you could see just by me running this simulation just several times. Now, what would happen if we decided that, our win rate is higher, or maybe our max profit is higher? Well, let's say that our max profit is lower. Let's say 200, but our win rate is higher. Let's say we go to 16 wins and 9 losses, right? So that's a 64% win rate. Of course, we would have to change this up a bit. We'd have to add some W's here. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have to add one more W. All right, and then see how that worked out. So at a 65% win rate, but at a lower max profit, let's even go down even lower. Let's say $175. All right. So now we're taking even less money, and but a slightly higher win rate. And let's just sort this out and see what we get every time. Still a positive expectancy almost every month. All right, there's a losing month. So this is playing tight to the vest, trying to get a slightly bigger win rate. But, we know that this isn't really true. We're probably closer up here to the 250 mark. And we know that will dramatically change our outlook. So there's a month where we had a big long drawdown, very unusual, but climbed right out of it and ended up with a okay. Here's, big profits in the month. We're talking about for a $5,000 account and you're making $1,200. That's a 25% return in a month. Now, you're not going to average that all the time, but you can see that if you run this simulation now enough times, what a typical month might look like. There is no real typical month. All right? But this is the power of trading in an asymmetric manner when you're limiting your loss to some known amount that is relatively small compared to having the potential for making a much larger profit. Now, I wasn't even including the larger outlier profits in here. Like I said, we're trying to be as conservative as possible. If we included the larger occasional, let's say, 1 out of every 10, 1 out of every 15 trades where we have a big return, then these numbers would change dramatically. And that's because you would only have the positive expectancy. You never lose more than your max risk, but you have the positive expectancy of every once in a while getting that big return. And so now your profit curve, is maybe doing this, but then every once in a while you get this big jump. So hopefully this makes sense. If you wanted to give a try of the service, go to 0-dte.com/try, 4-week trial. I think you'll love it. It's not an alert service, although we give alerts. It is a coaching and mentoring service where you get this type of information so that you can gain an understanding of where you are in your trading development. Still a little congested here. Do I need the cough button? Thank you for that cough button. So, yes, it is all right, Hem and Chin. I am new to the service. Thanks, Ernie. Your presentation puts asymmetric trades into a good perspective. I just have to remember process is more important than the goal of the day or week. And that is absolutely true. You cannot be focused on what your goal is to make for that particular month or that particular week or even that trade. Everything is about perfecting the process. And I talked about this yesterday. You can go back to that video and check that out. Process is the thing that you should be obsessing over. How to perfect that process, a continuous improvement process. Developing good habits takes time. But once you've developed the habits that construct a good trading system, then your job is to continually improve upon each one of those habits and the criteria that you're going after. And then eventually, you're going to start seeing these, what are even the positive expectancy on poor performance start really escalating. And your trading is going to take a new level. But you need to gain that perspective and stick with the plan. If you allow your mind to wander and get into the trenches, then you start making bad decisions. When you make bad decisions, you compromise that process that you're trying to perfect. All right, so that's it. That's all I've got to say. I want to thank you very much for joining us this morning. I hopefully that this was instructive and enlightening. If you would like to talk to me, please feel free to contact me. If you want to take the trial, just go down to the link below. Peace to you all. Time to go. I've got to go clear my head. Take care.